Okay, so we have an example here. It says prepare the sales ledger. The sales ledger is just the receivables control account for X Limited with the following transactions. Okay, so transaction one, we have an opening balance of 100,000. Okay, so we open up the T account here for our receivables ledger T account. Okay, remember we are following the double entry rules. Let me put the double entry rules here. Okay, yes, so this is our receivables control account. Okay, so we start. Our opening balance is 100,000. So since this is an asset account, a receivable, okay, the money that is being owed to you, okay, is an asset. So the opening balance, the balance brought down, we're going to put here. Say balance brought down 100,000 on the debit side. Okay, balance brought down 100,000 here. Okay. Unless stated otherwise, the balance brought down is always on the debit side. Okay. Okay. We have credit sales of 400,000 kwacha. So whenever there is a credit sale, the journal entry is this. Okay. Whenever there's a credit sale, since you're not receiving money, you're being owed money. So a receivable, remember, is an asset. Increase in receivables, you debit receivables. Okay, because receivables are an asset. So you're not receiving any money, but money is now the money that is being owed to you increases. Okay, so when the money that's being owed to you increases, you debit. Okay, so you debit the receivables, and then since according to the accruals concept, even though you don't receive any money or pay out money, you still record. So you're going to credit sales revenue. Sales revenue is a revenue account or an income account, and an income account increases with credit. So you credit sales revenue. Okay. So now this debit entry is going to go on our control account here. Credit sales of 400,000. Okay, this debit entry will come on our control account. So we're going to say credit sales here. 400,000. Debit credit sales 400,000. Okay, remember with the receivables control account, if the Nkongole increases, the money that's being owed to you increases, debit. If the Nkongole drops, the money that's being owed to you, if it drops, credit. Okay. Then we have dishonored check of 5,000 kwacha. So this is the whole story about how a dishonored check happens. All right. Originally, let's say a customer comes to you. They give you a check of 5,000. What do? You debit. Since you're receiving money, money is an asset. According to the double entry rules, an asset, increasing an asset, you debit. So you debit 5,000, okay, from bank. All right. And then you're assuming this person who has paid you is a receivable, okay, someone who owes you money. All right. So a receivable, once a receivable pays you, it means the money that they're owing you reduces. Reduction in an asset, you credit. So you credit the receivable 5,000. Now you go to your bank and you cash in that check, and they tell you that there are insufficient funds. So you need to reverse this entry here, okay? Because according to this entry, you're saying you received money, all right, and the person has stopped owing you. But you find now there are insufficient funds. So you need to reverse this entry here, okay? So what happens? Okay. Oh, so here I shouldn't have even put the amounts. I should have put debit bank, the amount, and credit the receivable, the amount. Okay, credit the receipt. So you need to reverse this transaction. Okay, so when we reverse this transaction, okay, this credit entry is going to go back to the debit, saying that this person is still owing us money. So you debit the receivable to say that they are still owing you money. Okay, so the money that is being owed to you has increased because they are still owing you. So you debit the receivable. Then you credit bank to say that this money we don't have it. Okay, so you credit bank. Okay, so this debit entry here represents the dishonored check here. Okay, so you're going to put on the debit side here dishonored check. Dishonored check 5,000. All right. Yes. Next, got payments made by customers. So here, people who are owing you money are paying you. So here, the Nkongole or what the money that's being paid given to you is you're being paid money, so the Nkongole is dropping. What is being owed to you reduces. All right. Yes. So not even need to put the double entry there, but for your sake, for studying sake, when a receivable pays you, you debit this general entry which I did here. You debit bank or cash, all right, and then you credit because that is money coming in. Money coming in, money is an asset. Increase in an asset, that's what we debit bank. Okay, then you credit that receivable because the money that they're owing you has dropped. That's a reduction in an asset. A reduction in an asset, you credit. Okay, so here in our control account, we're going to put payment by customers. This is reducing what is being owed to you. So you credit 30,000. Okay. All these transactions on the debit side, what is being owed to you is increasing. Then here on the credit side, what is being owed to you drops. Okay. Interest charged to receivables. This is the case where you've agreed on a timeline and you say, if you don't pay me by this time, I will be charging you interest. Okay. So if a receivable doesn't pay you and you charge them interest, you're going to debit the receivable, saying that what is the money that you're owing me has now increased. So you debit the receivable. Okay. Then you're going to credit interest revenue. Okay. Income or revenue increases with credit. So you credit interest revenue. Okay. So this debit entry here, okay, interest is going to come on the debit side of the control account. Interest charged to customers. Interest charged to receivables. interest charge to receivables, meaning more money is being owed to you, so you debit 10,000. Okay. Now we've got refunds to customers. Okay. Now this one is a special case. Okay. Let me just illustrate this. Okay. So for example, let's say you have customer X. Customer X is a receivable. All right. And customer X is owing you 1,000 kwaj. But then customer X, when it's time to pay, they come and they pay you 1,200 kwaj. This means customer X has overpaid you. He's overpaid you by how much? 200 kwaj. Okay. So you being a good businessman, knowing that, oh, this customer has overpaid the 200 kwacha. So it's like I'm owing the customer now. So this receivable has now turned into now a payable. Because you're owing him the 200 kwacha, which he overpaid you by. Okay. So you need to give this customer back their 200 kwacha. So in order to do that, you need to debit the account. Since on the credit side, there's a 200 kwacha balance here on the credit side, meaning we are owing them. So in order to remove this credit balance of what we're owing them, we need to debit our customer this 200. So this 200 debit is the refund we are giving our customer. Okay, to say that customer X, you overpaid us by 200 kwacha, so here's your 200 kwacha back. So this debit entry comes on the control account on the debit side here. Okay, so you're going to say refund to customer, 10,000. Okay. Yes. Then finally, we've got discount allowed. Say discount allowed, this is a discount you give your customers, all right? Yes, so that they can pay you fast. All right. So whenever a customer pays, discount allowed usually happens when a customer is paying you. And when a customer is paying you, what they're owing you reduces, the Nkongole drops. All right. And this as we said, when the Nkongole is dropping or what is being owed to you drops, you credit. So even the discount allowed will come on the credit side here. Discount allowed. Okay. Because this discount, you remove it from what they are owing you. If someone is owing you a 1,000 kwacha and you give them a discount of 100 kwacha, it means this discount is dropping what they owe you. From 1,000 kwacha, it's dropped to 900 kwacha. So if it drops what is being owed to you, credit. So you're going to say discount allowed 10,000. All right, so now we need to close our account. So we total the debit and credit side. So we can see the debit side is already bigger. 100,000 plus 400,000, 500,000. 500,000 plus 5,000, 505,000. 500 and plus 10,000, that's 515,000. Plus this other 10,000, you get 525,000. Okay, so we put it on both sides, say 525,000. Then our balance carried down comes on the lower side, which is the credit side. So you say balance carried down. Okay, this usually happens at the end of the month. So you say balance carried down. So if it's, you would say it's the 31st of December, 31st of January. Yes. So we're going to say this 525,000 minus 30,000 minus 10,000. Okay, so 525,000 minus 40,000. In my calculator, 525,000 minus 40,000, 485,000. This is the balance carried it down. Then at the beginning of the next period, you say balance brought down 485,000. This is how much is being owed to you.